You mentioned Bitcoin. I am somebody that's like 2 years ago is probably when we first started hearing about like, oh my God, Bitcoin's going up to $1 million, blah, blah, blah. And I think that was kind of when I got into investing and it kind of left a bad taste in my mouth. If you were speaking to somebody like me that has a bad taste in their mouth or has only heard bad about Bitcoin, I know it's been recently in the news that a bunch of big companies are starting to put it in their balance sheets and things like that, which is going to kind of force a snowball effect where people are going to start having to take Bitcoin seriously. Like, can you talk to me as far as having a bad taste in my mouth and not really understanding what Bitcoin really means and why it might be something I at least should maybe do some research about?
Yeah, I definitely recommend everyone at least research it to understand why, in my opinion, it's the most sound form of money, ever created. If it's not going to be a currency, meaning used to transact or become money, it's at least going to be a digital store of wealth. So just like the old school gold bugs are like, this is God's money, no one's making any more gold, that kind of a thing. I really feel like in this digital age where I mentioned it's different this time earlier in the podcast that we're getting into, again, technology being the great equalizer, if you will. I really feel like everyone should at least do their homework on it. People associate Bitcoin with like scams and things like that, which there's definitely a ton of, but there's also scams with US dollars, with penny stocks, with, things like that. There's scams with everything. My point is that Bitcoin is basically a trustless form of money, meaning that I don't need to trust, Brad or JJ. All I need to know is the number to his wallet, and he's going to get this Bitcoin, and our transaction is complete. That's it. There's no bank that needs to verify it. There's no wire. So I just bought a house. We had to wait for a wire to go through. Why is that? It's 2020. Like, how does that even make any sense right now? You know, my point is that as long as I have, an address, there is no central entity controlling the flow of Bitcoin, and everything is verifiable by the ledger and blockchain system. So everyone can verify at 10:23, Saturday, October 24th at 10:23 a.m. Eastern Standard Time, this wallet sent that wallet X amount of Bitcoin, okay? And that's it. And you verify the ledger, and it's always on the blockchain forever, for eternity. You don't need to do any shady backdoor deals or try and figure out, okay, is JP Morgan getting a cut of the stimulus? What's going on? Where's my money going? That kind of a thing. The reason that is becoming more and more appealing is because when you have all this money being printed, people are starting to lose trust in the central institutions, aka the Fed, that are, controlling our monetary policy, if you will. So this is for people that, let's say you're a business owner, you just sold your business for 20 million bucks. And do you want to put all that in stocks? Probably not. Do you want to put it all in real estate? Probably not. This is a way for you to be able to store your wealth for generations to come. So I feel like everyone needs to go back to what I said earlier and really think about how they want to construct their portfolio. And that way you can actually allocate a little bit to Bitcoin. So my theory is that, okay, if Bitcoin goes to zero, no big deal. I lost, 5% of my portfolio. It's not going to kill me. I'm not going to lose my sleep at it. But if it goes to 100,000 per Bitcoin or 500,000 or whatever, I'm not saying it's going to, I'm just saying, what if it does?
Right.
Bitcoin could easily be a candidate for the next world reserve currency.
So you mentioned, having a small percentage of, Bitcoin in your portfolio. And I'm a big advocate of that as well. I speak out about how like speculative investments, things like cryptocurrency you hear some people talk about like, oh, you shouldn't do anything like that. But I like having a very small percentage of my overall portfolio, my overall wealth in something like Bitcoin or in a little bit of a maybe more speculative investment. Because like you said, if Bitcoin goes to zero, all right, I just lost that little bit of a percentage, but it's not going to hurt me over time, over the long haul. It's not going to take a big pull out of my pocket. To where the upside of that, the potential upside is there also to where if it ends up going the right way for you, you're going to come out looking pretty far ahead for just having that real small risk adverse, of your portfolio being invested in something like that. And I'm also a believer in digital currency, Bitcoin. I can see where it's going and the technology advancing and more and more companies coming onto it. So I'm really glad you mentioned that.
The one thing that's interesting to me about it is the fact that it's kind of like a worldwide currency too. So we don't have to worry about, dollar conversions to the euro to whatever. It's kind of like it's a global thing that we can do. And another thing that I want to ask, what is the difference between, because Bitcoin's not the only cryptocurrency, right, guys? So like, why is Bitcoin just like, are they the Beatles? Are they the first one to do it? And that's why we're into Bitcoin? Is that really it?
Yeah. So a lot of people, some people presented the theory that, okay, you had Ask Jeeves, you had Yahoo, you had Web Crawler, you had, all these different search engines. Why does everyone use Google now? It's just because it was a better version of, the first search engine. It's better than Web Crawler. It's better than Yahoo. It's better than whatever, Bing, if you will. So people are saying, like, what if there's a better, cryptocurrency that comes around that transacts faster or has, less of a fee, for transacting using it, that kind of a thing. And that rebuttal is typically that Bitcoin, there's only going to be 21 million ever made, and it's already stood the test of time since basically its inception, for over a decade now. So with that being said, it's been under attacks, it's been under, a bunch of different things, and it's always been resilient. Other popular cryptocurrencies, there's not a finite number of them, meaning it's not deflationary. So like every 4 years, Bitcoin goes through a halving. So miners who are verifying these ledgers, these transactions that I made an example of me and JJ, they get rewarded with Bitcoin after they verify so many transactions. That's how Bitcoin is mined into existence, just like gold, if that makes sense. So with all that being said, you're becoming rewarded less and less and less as time goes on, and there's only 21 million ever made, meaning that it's a deflationary asset, meaning that you can't just print 3 trillion of it out of thin air, making it worth less. It's going to only become worth more over time because it's scarce. There's only 21 million ever. So I know that didn't necessarily answer your question of like why Bitcoin, but it's checked all the boxes of being a long-term asset, if that makes sense.
All right. So I'm almost ready to buy Bitcoin. My last question, all the people that are hating is like, I've heard stories like if you lose your wallet number or something, like I always hear people like, oh, I lost my Bitcoin. Like, what does that mean?
Yeah, so Bitcoin is interesting because it's not the most user friendly. You have to be somewhat tech savvy to use it, meaning that you have a Bitcoin wallet where you can send and receive money from. So you send money to someone else's wallet, you receive money into your wallet. Just think of it as a bunch of different numbers and letters, and it's randomized. Okay, there's billions of these combinations. You can never just guess someone's wallet. It would be almost impossible. But my point is that when people say like, oh, I lost my Bitcoin, that means that it was either sitting on like a hardware wallet, meaning like a USB stick, if you will, or like somewhere on a hard drive somewhere, because those people are taking it off the exchanges. So if you want to look at stocks, our stocks are sitting at a brokerage house or sitting on an exchange, if you will. So like Robinhood, M1 Finance, Webull, Schwab, Fidelity, whatever. If you look at like Coinbase, that's a cryptocurrency exchange. If you don't own the keys to your Bitcoin, meaning that if you don't own the keys to your wallet and have your Bitcoin in your wallet and it's sitting on an exchange, that exchange could go away tomorrow, go out of business, and you lose your Bitcoin. So what people do is there's many different ways to store Bitcoin, but the way that I do it is with a hardware wallet. So picture like a USB stick for people that can't, see my fingers or, see the video version of this. Picture like a USB drive. And you basically take your coins offline, off the exchange, and put it onto cold storage, which is kind of like a USB stick. And now to access that, you have a password of a number of different words that you memorize to access all that money or all that Bitcoin that's sitting on that wallet. So if you forget those words or you don't know how to take it onto the hardware wallet and that exchange goes away, you can lose your Bitcoin that way.
Yeah, and I do want to say this. This probably sounds like a lot to people who maybe have never invested in cryptocurrency.
Oh, dude, my mind is blown. I have no idea what you guys are talking about.
And I'm not doing a great job explaining.
No. You're doing a great job. I'm just saying that's so much information for someone who may have never even looked into it. That I remember. So I purchased it right before it had the big shoot up in 2017, I think it was, and I had no idea what I was doing at the time, to be honest. I just kind of heard about it. I was like, throw like $100 whatever in here. And then I started learning about the wallet situation. Honestly, like the best thing that I did was just doing simple Google searches and trying to learn on how to like get your wallet, what the wallet actually meant. And after you read it for a while, everything starts to make sense. So like if you're listening to this podcast right now, you're like, what the hell is he even talking about? Just, it does take time to really get a solid understanding of how it all works.
I was gonna say, then you feel exactly the way Brad feels right now. So like when you say like an exchange could go away, like, so, all right, I can buy crypto on Robinhood. So if I buy crypto on Robinhood and I own it, quote, in Robinhood, and then Robinhood goes out of business and they're gone, I would lose that. So if I buy crypto on Robinhood, I should also be putting it in cold storage as well, is what you're saying?
So you brought up an excellent point that I should have touched on. You don't own your crypto on Robinhood. You don't own the Bitcoin. So if I go to Coinbase, I can take that off of Coinbase and transfer it to my wallet. On Robinhood, you don't have the ability to do that. I forgot the exact thing. I'm going to sound stupid now, but you are only trading. I don't know if it's like Bitcoin something. It's not literally the actual coin. It's just the right or something like that. They're just holding it, I believe. I know I'm butchering this right now.
No, there's some good videos on YouTube about that, about why buying cryptocurrency on Robinhood is not the greatest way to do it if you really want to buy cryptocurrency.
Okay, so if I'm gonna buy it, you keep mentioning Coinbase. Is that where you go get? Is that where you start with your research?
That's just one exchange. Like there's a bunch of them. There's Kraken, there's BlockFi, there's a million of them.
So, and you mentioned that there's only a fixed amount of Bitcoin out there. So obviously, I'm sure one Bitcoin is a lot. You're pretty much always buying a fraction of a Bitcoin. Is that true? Like
you can buy multiples if you got enough money.
My only like Bitcoin purchasing like experience is watching Dave Portnoy do it with the guys from the Facebook because apparently the guys from the Facebook own the Winklevoss brothers.
Yeah.
Apparently they own like a quarter of the world's Bitcoin. Jeez. And they were getting Portnoy just like dropped $250K on, oh yeah, sure. And they were like, okay, do it. And I think the Winklevoss twins, they might have an exchange. So I frankly need to learn about it as well. So it's like, that's why I'm glad we have these conversations because this is so like mind-blowingly interesting for me. But Marko, are you still thinking that like it still should be a speculative play? Like, should people be heavily invested in Bitcoin, or should it primarily just be, a speculative play with maybe 5-10% of your overall portfolio? Or like you said, it's all about whatever your pie looks like.
Yeah. So it just depends on what you believe in. I mean, I personally have only about, I'd say like 5 to 7% of my net worth in Bitcoin, not even. But again, that's just how I want to structure my pie. If things start to change and you start to see like the writing on the wall of like, hey, can I really trust, the US dollar or whatever? Like, what if the dollar lost its reserve currency status? What if oil was stopped trading in dollars? What if US military wasn't as strong as it is? What do you think is going to happen to the value of the dollar? I think the dollar is so strong right now because the world trades in dollars. There's an appetite for the dollar. So certain economies peg their money to the dollar. Like if you've ever been to the Bahamas, their currency exchange rate is basically pegged to the US dollar. All oil is traded in dollars, not all, but most, with the petrodollar. So even if I'm in Saudi Arabia, I'm transacting in US dollars, buying and selling oil. And that's going to go into another conversation of why we've been in Iraq and Afghanistan for 20 years. But it's 10:36 on a Saturday. So
I can't believe like how confusing it can seem, but how so many intelligent people like yourself are at least there. And you were saying before, and I want to follow up on a thing that you said, that there's only a fixed amount, so the value of it can really only go up. But so why does it trade? Like, why did it shoot up in 2017 and dip? Does it have certain similarities to the stock market in that sense? Because people are still buying and selling it. So the value of it can go up, but people may not want to pay that price. Is that why the price of Bitcoin fluctuates?
Yeah, that's a good question. So it's like any market. It's worth whatever someone is willing to buy and sell it for. So if I say, hey, Brad, I have this Bitcoin, you want to buy it for $1 million? You're going to say, go pound salt. If I say, hey, Brad, I have this Bitcoin, do you want to pay me $12,987 for it? You'll say, hey, yeah, maybe I think that's a fair price. But to answer the other part of the question is that some people say that Bitcoin is an uncorrelated asset, meaning that it's kind of like gold. So gold just does its own thing. It doesn't care what the stock market's doing. It doesn't care what's going on in the world. It's just its own little uncorrelated asset. Unlike stocks, say for example, Greece goes through bankruptcy, that's still going to affect the S&P 500 in some way, like we saw, a few years ago. So that's why people are becoming more and more interested in uncorrelated assets, to where they don't want to be tied into the market so much. They want to be in things like classic cars or, old whiskey or fine wine or art.
Pokemon cards.
Pokemon cards.
That's an uncorrelated asset. Pokemon cards don't give a shit what the market's doing. If you got that Charizard, like you're getting paid, dude,
Yeah.
So people say that Bitcoin is an uncorrelated asset, but what I've seen, at least over the past couple of years, it almost does exactly, not exactly, I'm going to get hated on for this, but I feel like when the market dropped in March, Bitcoin dropped. You can see the chart. When it went back up, Bitcoin went back up. Now with all the news of like MicroStrategy taking $450 million off their balance sheet and investing in Bitcoin, it had a little uptick. When you see PayPal getting into transacting with crypto and Bitcoin, it had an uptick. When you see Square with Jack Dorsey investing $50 million on their balance sheet into Bitcoin, it went up. Why do you think it's at 13,000 right now? So my point is, I think it's correlated on news, just like any other asset. If someone said like, hey, Marko, Samsung Galaxy S9 Pluses are going to be the next big thing, I'm sure this would go up in value too. But my point is that it's supposed to be an uncorrelated asset, and that's why people keep it in their portfolio.
I love it. Pretty crazy, isn't it?
I love this podcast because every episode, I just learned something completely new.
That's literally the best thing about interviewing these people, these guys that we have come on that are way knowledgeable in their space is we selfishly get to learn about it. So
it's funny. You go out to the bar with your buddy and you're having a couple beers and you're like, hey, Marko, how about, we're at the bar. Could you tell me about crypto? It's like, you're a weirdo. But you put some headphones on and a microphone in front of you. You could just talk about the weirdest things. You could just we could talk about whatever we want if we have headphones and a microphone on. But
that's right.